in right now, but over the longer run, meaning over the next few months, we do look for some resolution, meaning some additional strength for the dollar versus the euro, and in terms of the euro, we also look for some weakness there versus the pound.
Now, if I was talking to you this time last year, there would be a lot of commentators, I don't know what you were thinking at that point, but people were predicting the demise of the dollar, saying that it was in a long-term structural decline. Is that changed?
Well, that has changed to a certain extent. Actually, I should say the underlying fundamentals of the dollar's place as a reserve currency has not changed, but the debate around that question has changed, in that this crisis has shown that the dollar maintains its appeal as a safe haven currency during times of financial crisis due to the depth and liquidity of U.S. financial markets.
Now, the elephant in the room has to be China to some extent as well, and if they decided to have a flexible exchange rate, one which was free and floating, what difference would that make?
Well, it would make the Chinese currency more attractive as a reserve currency, because it's certainly one of the requirements, a free and floating exchange rate where intervention is not a large threat. However, China remains very far from being in such a position, and it would be a bit premature to suggest that China is going to overtake the U.S. in terms of its place as the reserve currency.
But many central banks have been diversifying their currency reserves, including a basket of currencies, not just the dollar, but the euro. And what impact is that having? Is that what it's coming to the support of the euro fundamentally right now?
Well, over the last few years, we have seen a flow diversification, meaning that many countries, their inflows of foreign currencies are in dollars, and they don't keep it all in dollars. However, at the present moment in time, we're relatively far from many of the emerging market countries from levels that would trigger intervention and therefore a buildup in reserves. So the reserve allocation and distribution story is not playing the role that it did, say, 6 months ago or even over the last few years.
Right, G10, preparing for an economic turn. Walk us through that.
Right. Well, we recently have revised our forecasts and show the trough for Eurodollar in the third quarter of this year as a recognition of our belief that the worst is probably behind us.
So you're looking at $1.20 on that, yeah?
That's correct. The worst is probably behind us for the global economy, and when we move into the second half of the year, most of the world's major economies will see the start of a sustainable recovery. We're not exactly there yet, but we believe it will be there, and that recovery of the global economy will spur some dollar weakness as the safe haven bid comes to an end. The global deleveraging process provides less support for the dollar, and also as the consumption is boosted to a certain extent in the U.S., we have the end of this narrowing of the current account deficit.
If we look at sterling sort of splits the difference between euro dollar. Is that going to continue?
Right. Well, during the second half of last year, during the height of the financial crisis, sterling underperformed considerably and arguably was an overshoot, certainly relative to many short-term models such as interest rate differentials, and we look for sterling to continue to retrace that overshoot, meaning euro-sterling moving further down.
Yeah, very slow progress. 89 pence, you're saying in June, we're at that level now, really?
Right. We do look for it to be somewhat slow, but there's a bias to the downside. In fact, we have recommended to our clients already to be short euro sterling.
David Powell, thank you very much indeed for joining us. David Powell there from Bank of America Merrill Lynch. Up next, Sarah Walker's around. She'll be giving us the latest international news headlines, including